From U.S. News and World Report, should you wait for mortgage rates to fall to buy
Yes.
to buy a house? Yes. I don't
Yes.
know. Guys, we talk about this, but I actually want to show a graph here because on the screen you're going to see this rate impact on national home prices, and then you're also going to see the home price index versus the 30-year mortgage rate. Okay, so the left part of the screen you're going to see the home price index, and then you're going to see where mortgage rates have kind of like gone along, and then we had the bottom of 2021 and 2022 where mortgage rates were at their lowest historically ever. We refinanced half the planet. Everyone, I don't know, some crazy percentage of homeowners have a rate lower than 4%. But then you start seeing, in that same time, you see the prices march up and to the right. And then prices hit their peak kind of the summer of 22. I usually say that was like June of 22 is when we kind of saw like the local high for real estate. And the rates just started marching up in March of 22 at the same time. So, here's the conundrum. By waiting to buy a house, houses are now more expensive than maybe you can afford. When they were this expensive and the rate was low, your monthly payment was attainable. But now the price is still this high and the rate is high, and it's literally just squeezing people out.
Yeah.
So what is our advice to people who are feeling like they have been squeezed out and they're discouraged? What would you want to tell them to do? Should they continue waiting to buy a house, or should they do something different?
So I think patience doesn't always pay off for buyers who are trying to time the market. And if you see these big economists not being able to time the market, measure the market, or predict the market correctly, what tells you that as a normal new home or a home buyer that you're going to be able to understand the trenches of real estate?
Yeah.
I feel that you need to focus on what you can control. What do you want from the house? What's your needs? What's your emotional versus rational, decisions when taking that property, and really understanding if you can make that financial payment for maybe a good 5 years. And if you could withhold that payment, there's going to be windows of opportunity where you can ease that. Yeah. But I feel that it really comes down to you can't time the market. You can't control the market. I mean, we've been seeing it. Rates do whatever they want to do, but you can control what you want. You can control the motivation of how you're going to do what you want to do. And you could really pinpoint what you're going to use the investment for. Like we've been talking about, now people are looking at it like, hey, I want to flip this house, or I want to rent it out, or I want to make an investment of this house. Yeah. So I think that's what my advice would be for people that.
I'm glad that you bring up the whole government, the whole Fed, the whole, the predictions of what's going to happen in the market,
Predictions.
How many predictions was it that the Fed is going to reduce the Fed funds rate?
Well, the predictions were all over the place,
right?
It was like, maybe 6 to 8, nope.
6 to 8,
3 to 4, nope.
And right now, we're kind of iffy if it's going to happen in September. Yeah. But there was already like a 50, 60% chance that it was going to happen in June.
Yeah.
And guess what? It's not going to happen.
Honestly, I'm not confident saying that it's going to happen.
And that, to your point, absolutely. You got to identify what your true vision is, what you're able and capable of doing in the now, right? And what you're willing to sacrifice, because everything comes at a sacrifice. Are you willing to sacrifice Ruth Chris, every other month?
That's an HOA payment.
Willing to just go and stick to the dollar menu at Jack in the Box? I know there's no more dollar menu, but those are the things that you have to do, right? Are you willing to leverage your garage and convert it into an ADU? Once you get in there, there's multiple ways that you can actually have that help to get you to that, to that affordability. But you just got to tell yourself what you're willing to do.
You've been saying that word vision, and recently I've been thinking, and I've been having talking to other people about, your vision, your personal vision. Yeah. And sometimes, all the time, the vision that you have is yours only. So when you share it with somebody else, they might not see it, but that's okay. As long as you're able to see the vision, even when it's not there, the little things that you're doing is like that 1 foot in front of the other, 1 foot in front of the other. Yeah. And if you have the vision, dude, that in itself is a win, because some people have no vision and they don't know where they're going. So if you have a vision and a plan, you're already way more ahead than a lot of people. And I think that's the biggest thing that gets overlooked, that people are just like house. Well, let me plan this out just like I plan anything else. Like this is in itself should be planned out. It's not just an impulsive buy. It's as emotional as it's rational. And I think you really have to have a good understanding.
I mean, I've been very comfortable for the last few years, but now looking at everything that's happening in our market, the economy, seeing that now I'm a grandfather, right? That's why I was absent the last two, and welcome me again. But my new motivation and vision is to facilitate more of the process for them. Because I know, guys, is it going to be easier for Santi to purchase a home in the next 15 years versus what we can do right now?
No.
You know, so for me, it's kind of like, if that alone is not an incentive for your kids, I don't know what else will be.
Yeah.
But that's my new motivation is, how do I help create this generational wealth with my true knowledge, expertise, and current resources that I have right now, and all the understanding I do understand in the market.
And let's talk about this. Like, really honestly, like, look, this is the problem in waiting. Since 2000 and let's just say since 2020, okay? If since 2020 national home prices have gone up 44% and rents have also gone up at the same clip, then you're asked out of this.
Yeah.
You're being left in the dust.
Yeah.
And so the problem is, with a risk exposure approach to this, you're saying, oh, well, if it's too risky to buy a house, well, then you are subjecting yourself to the market rent at whatever it is, wherever you live. And that direction only goes up. I have not seen a report come out in any of the national news, any of the local news, or any of the economic, real estate, and mortgage news that says rents are declining at a rapid pace in X amount of cities anywhere. They might be happening, again, super locally or hyper selectively for other reasons. But, unless there's an oversupply of places to rent, prices have not been plummeting. Yeah. So you are going to be missing out. And I hate to just say it so bluntly and, let's say, callously. Yeah. But that's the truth. There's risk exposure to this. Home prices are going to go up while you wait.
Yeah.
They just are. We'd have no evidence to suggest that home prices are going to plummet this year or next year. Yeah. We have no evidence yet of when mortgage rates are going to come down. We have no evidence yet of when inflation is going to ease up. We have no evidence yet of when there's going to be more unemployment or higher unemployment that the Fed needs in order to start justifying that they make some rate cuts. Yeah. So there's no evidence to support that waiting is going to help you. But what people can do along the way is bulk up your credit, pay down your debt. Keep those cards open after you pay them off. Don't close off credit cards that have really good credit history with no late payments. Maybe your balance is high, pay it down. That's good. Maybe figure out a side income. Maybe figure out a second income. If you're married and one of you is not working, maybe one of you needs to start to work. Yeah. Try to pad up your savings a little bit. If you have money invested in the market, let it ride right now. It's had a really good return. I mean, I'm talking about U.S. markets and indices right now. If you've been in the general market, it's been up for a while now. So maybe you just got to leave some of your money. If you're going to be waiting and you're going to be patient, then leave some of your cash and your savings and your investments, leave them there for a while. And I think even if prices do go higher against you, if you can continue to save and have a bigger down payment and then add some more income and get your credit higher, I think those are really critical things that are going to help people get into homeowners.
I think we're done.
Flex the bag.
Flex the bag. I mentioned it because this specific article is really, again, it's talking about affordability, which I don't want to talk about anymore, at least for today. But,
You're talking about
their point is this: lower rates could spark competition. Okay, well, how do you compete against that? Be better. Be better prepared. Be more capable than the next guy or the next gal. Be more ready. Have your file tightened up. Submit your documentation to your loan officer every month when you get new pay stubs. Submit your tax return to your loan team as soon as you get it back from your tax preparer, your IRS one and your state one. Okay. Mortgage rate trends are difficult to predict. Yeah, duh. The Fed's being data dependent, so that's not going to work in your favor. You're waiting on them.
And they keep switching how they determine this data.
Well, and I hate that. It's a whole separate thing for me because it kind of gives you you can like sidestep it here or sidestep it there whenever it's not going your way, and then still blame something else. Don't have to take credit, and also then wait for something later to fix.
It's just, I feel that everything's so intertwined that one thing breaks, the other thing works, but then if everything breaks and this actually works, but we need that to work, so it just doesn't make sense because something's going to break, something has to break, something's going to.
So I want to go over these just at the top level. So number one, when does buying a home make sense? When you can afford the monthly payments? Yes. When you plan on staying to the home for a little while? Yes. And when buying a home won't drain your savings? Yes. And also, based on our previous article about millennials and Gen Z, when you have other willing participants to enter into an operating agreement where you all have some sort of executable assignment to that home and that property and the commitment to win together.
Well, here you have the previous article. You have the two partners that purchased 24 homes, house hacking.
Right.
Can they afford a payment now on their home?
Well, yeah.
When you own that many properties?
Right. Well, and the risk is spread. The risk is spread among all these other people they're doing that with, too.
But that's where it's at, right?
Yeah.
Like, yes, these things can happen. You just got to find the right people to do it with.
Yeah.
And, at the times, that right people, that right person is right underneath your nose, right there.
Yeah.
you know, but we don't communicate it. We don't say we just want to try to do it on our own, and we put all this pressure on ourselves. When we could put pressure on all three, it's easier to go to sleep.
I think, and I'm gonna put this on the screen right now too, guys. This is gonna be the 30-year fixed rate mortgage forecast. Going to that really quickly because it's really about cash flow. It's really about cash flow and monthly budget. If your budget sustains what you want to do, go do it. If it does not, you can't, or maybe you just shouldn't. And then where you have cash flow, if you're house hacking and you're doing this, multi-ownership kind of operating agreement deal, then maybe this rate forecast doesn't matter to you.
Yeah.
If you're a single person buying a home, or you're married buying your own home, you're not worried about this investor stuff, cash flow and all that, then really it does become about the mortgage rates. But as you can see on this chart right here, they're not trending downward super fast over the long period of time. You're talking about going into 25 and through into 26, still above 5%, which I know 5% is low historically, but again, we're talking about historically rates being higher in the past when home prices were super low. Now we got elevated rates and elevated prices at the same time. Not a good combination.
No, it's true. But these numbers still work.
Yeah.